So we'll be starting in 30 seconds. Just the queue is there are people who are joining right now. Just a minute, we'll be starting. Yeah. Hello everyone. On behalf of Aryan Capital, uh, I will welcome you all to the call of Sheela Homes Limited. With us, we have Mr. Amit Kumar Gupta, Group CFO, and Mr. Nikunj Jain, who is the Group Head IR. Without taking much time, I'm handing over to the management. Today, before I hand over the call to the management, I will lay out the flow. We will start with a brief intro and opening remark with the management, and we'll move to the Q&A. Any participant who would like to ask the question can raise their hand or put them in the chat box. First, we'll take the questions from the participants who have raised hand and move into the chat, and then move in the chat box. If the time persists in the end, we will take the questions that I have received from the client who were not been able to participate because of the compliance reasons. First, please note we'll take the last question at 5 minutes before the end of the session. Now I'm handing over to the management for the opening remarks. Mr. Amit sir and Nikunj sir.
Thank you, Abhishek. Thank you for organizing the call and inviting us to the conference.
Yes.
So just to start the conference, I would like to welcome all the participants to the meeting. I would try my best to answer whatever queries the participants have. In case I miss out anything, please route it through Abhishek, and we will try to send responses as much as possible. I believe you all know about Sheela Foam, but still I will give a brief description about the company. So we are India's largest foam and mattress manufacturing company. We started around 50 years back with foam manufacturing, and gradually we graduated to branded mattresses. We started with the brand name Sleepwell. Over the last 30 years, it has grown to one of the most renowned mattress brands in the country. We also have facilities in Australia and Spain. We have acquired these companies in 2005 and 2019 respectively. They are primarily foam manufacturing facility, and we manufacture it for mattress manufacturers and other suppliers. Recently, we have acquired Kurlon Limited also, through which we got the ownership rights of Kurlon brand of mattresses. With both these brands coming together, today we enjoy a leadership position across every micro market in India. In South and East, Kurlon is strong, whereas in North, Central and Western India, Sleepwell is strong. In addition to this, we also acquired a 45% stake in a furniture rental company called Furlenco, based in Bangalore. The company has operations in around 28 cities across the country. As regards performance, we post the acquisition of Kurlon, we have been working continuously to derive synergies between the two companies, which we have successfully done in the last 1.5 years. A lot of synergies have flown into the company, and we have been successful in taking Kurlon from a 4-5% EBITDA margin to around 10-11% EBITDA margin for the consolidated India operations. I think with this, we can go on. I can go on explaining and giving details about the company, the products, the channels, and a lot many things, but I would like to focus on specific areas in which you guys have questions. So I will hand it over back to Abhishek to permit all the participants one by one to ask question, and I will try to answer that to the best of my abilities. Over to you, Abhishek.
So I'm handing over to first question is from the Mr. Monil Gada. Monil, you can ask your question, please.
Hi, sir. I just wanted to ask, in Kurlon, we've acquired 97% stake. Would we be acquiring any additional 2.5% stake?
So we have already received an approval from NCLT for the merger of Kurlon and Sheela Foam, which we had filed around 1.5 years back. Through this merger, the remaining 2.5% shareholders of Kurlon would be swapped to the with the shares of Sheela Foam Limited. So now we will be holding the entire business of Kurlon in our parent company, and we would not need to buy any incremental shareholding.
Sir, to add to that, do we see any timeline to close this merger?
We have already received NCLT approval. Now it is just filing those approvals with the requisite stock exchanges, for which we have a 30-day time period. So I believe by end of October, everything will be done and dusted. And this quarter results, which we would be publishing, would be for the merged entity.
Okay, that helps. Also, just to add on, would we be practicing the same with Furlenco as and when it grows?
No, Furlenco, we hold around 45.5%. There are other investors also, including private equity investors and many individual investors. So currently, we don't have any idea of acquiring the rest of the stake in the company. Going forward, we will see how it pans out.
So there were current rounds that were making way for Furlenco raising additional capital. Are we participating in that round as well?
So we are participating to a very small extent. Most of the capital is coming from third-party investors. That small stake amount would just be put in to retain our shareholding to some extent. It will still dilute, but would not dilute by a larger margin.
Okay, noted. Thank you.
Yeah.
The next question is from Resha Mehta. Resha, you can unmute yourself.
Yes, thank you. So, sir, first question is, on the retail part of our India B2C business. If we see, retail store experience for brands has become more and more experiential, right? If you look at one of our, relatively newer peers, which is the Sleep Company, their stores are extremely experiential. So what has happened is that in the online space, we've lost, rather they've gained market share. Players like these have gained market share. And, wherever they are opening such experiential retail stores, at least, the urban, crowd, which probably was a customer of your premium Sleepwell mattress, kind of gets an incentive to, switch to the Sleep Company kind of a brand. So, do we as a company, both the brands, Sleepwell and Kurlon, do we have those ambitions to have a different retail experience, different store format versus, I think, the 400 EBOs that we have for both Kurlon and Sleepwell put together? And while, somebody like the Sleep Company is already at 160 stores. So do you think this is a threat, and are we doing something about this?
So thank you, Resha, for your question. First of all, I would like to clarify a little bit here. We have not lost on the online segment. Rather, we have grown by 70% in the last year in the online segment, and this year also we intend to grow by around 40 to 50%, and we are on track to do that. As regards experiential showrooms, Sleep Company has been opening stores. Yes, they have a different way of handling customers. Probably they try to give more inputs from a consumer satisfaction perspective. But I can tell you that we have been following those practices for quite long. Yes, there may be differences in experiences in stores, which we are working for. Our consumer consumer experience cell is continuously working on that to improve the experiences. But with 5,000 EBOs across the country, 4 to 5,000 EBOs across the country, there might be some differences in experiences that you have across different stores. So as regards the share taken by or the movement of the consumers to sleep company is concerned, I would say that whenever there is an incremental store, there is an incremental player, the consumers always want to reach out or see all the products which are available in the market and then take a decision on that. But our experience had been even since the launch of sleep company that the quantum that we have gained, of course, I would not say in absolute terms we are much higher than them because we were much bigger. But even in percentage terms, our volume growths have been much higher than them. You can see in the last 2 years, mattresses have grown in double digits. Even in the last year, our volumes grew by 15%, and current year also, we are looking for a double-digit growth in the mattress segment. So I would say that yes, they are doing something which are good, but we focus more on how we can improve our experiences, product portfolios, and can give the right product and experience to the consumer rather than following the new players who are coming in the market. We of course keep an eye on them, not to say that they need to be disregarded, but I think the task that we are doing and the results that we are getting out of it is much better or on the positive side than the new age consumers.
So just to follow up here, so sorry, you said how many EBOs do we have? That
4,000 to 5,000.
And what is the difference between these EBOs? Are there different formats? Because what I see around in Mumbai, they are, those very small stores and, with not a great, experience like the, a modern age, a new age brand would probably have. So what is the difference in those formats?
We have 3 formats. One is 300 square feet, one is 500 square feet, and the other is 1,000 square feet. So maybe in some very high rental areas, there may be smaller showrooms which are there. But we have shops in all the 3 formats. In addition to that, we also have company operated, company owned stores. We are already having 26 stores across the country, and there may be some more which you would see going forward.
And the other question was, on the professional CEO hiring. So are we looking at that, and also margins, right? So margins, we were expecting that, post the integration synergies, our aspiration was to reach, 13-14% kind of margins, at least for the India business. But obviously, the margins have not come in, right? 7% margins in FY25. So despite, 120 crores of savings we've already seen, but that's not reflected in margins. So, what kind of gives us the confidence that I think we are yet to see another 130 odd crores of savings. So what would, why would that savings actually lead to effectively an expansion in EBITDA margins?
So Resha, I would say your information is dated. You have not been through the latest information which we have submitted along with our results this time. First of all, our margins are not 7%. Even in the last year, we had presented in which we had told you, given the details of how the margin is at 8% plus. But leave that aside, in the first quarter of the current year, we are at 11 odd % margin. And from a savings perspective, we have already achieved 190 crores in the first quarter, which we have declared in the presentation. And there are 60 odd crores which are yet to come. Finally, the 13-14% margin which we had said was over a period of 3 years. It was not to be achieved in financial year 25. It was a financial year 27 target. and I would say that we are fully on track to achieve that.
So, and the professional CEO?
Yeah. So I would object to this terminology professional, or the people who are working in the organization still are very professional. I would see an external CEO who had come and joined the company, but as declared in our when he resigned in our announcement as to why he has left. Post his going, we have consolidated the entire company under the leadership of Mr. Tushar Gautam, who is the managing director of the company, and operations, including sales and the operating side of it, has been taken over by Mr. Rakesh Chahar, who has been with the company for last 30 years. He is very thorough with the business. He has developed the brand Sleepwell along with Mr. Rahul Gautam, and now post Nilesh going away, he has taken over the reins of the company. As far as the new CEO is concerned, we are not hiring any individual, because whenever you hire at such senior positions, it creates a lot of disruptions, and we are under obligation from our investors to deliver what we had committed. So the very first thing is to consolidate the entire operations and deliver the results, and we feel that the current team is fully geared up and fully capable to deliver the results.
Sure. Thank you.
Thank you.
Hi, sir. Amit here.
Yeah, go ahead, Amit.
Yeah, just wanted to understand the strategy. So today you have 50% market share after Kurlon. So when do we see the price increase? I'm logically asking this because most probably we'll try.
Your voice is not very clear, so I'm not able to get the entire part of your.
Okay, is it okay now?
It is better. Yeah.
Yeah. Just wanted to ask the strategy. So most logically, you have acquired Kurlon to dominate the market and price increase. So when do we see that price increase kick in and premiumization trend that is going on? And just wanted to understand strategy behind acquisition of for Lenco, and what is the company seeing the future? Like what is your aim? Just wanted to understand the strategy of this.
Okay. I think you have asked me too many questions. Let me take them one by one. Okay. So rationale behind Kurlon acquisition, I think very clear enough. Kurlon, we have been tough competitors for the last 30-40 years. We have also tried to make inroads into South and East, but unfortunately a brand which is recognized in it is a territory is very strong, and it is quite difficult to break that brand and acquire the leadership position. When Kurlon was up for sales, we found it as the most opportune opportunity to gain a pan-India leadership, since they were already leaders in South and East, and we were leaders in Northwest and Central India. With the acquisition of Kurlon, today we are the largest player in the mattress segment category, branded mattress category. We enjoy leadership position pan-India. We have distribution channels which contain around 4,000 to 5,000 EBOs and a total of 12,000 plus touch points across the country, including those which have come along with Kurlon. We have operating facilities across the country. From any of our facility, any micro market to be serviced is an overnight distance. Within 300 kilometers, we have a plant from where the consumer can be serviced. 70% of the material that we service is within 24 hours of the order. So there are a lot of benefits from a long-term perspective that we have got from Kurlon, but even from a short-term perspective, I think there is a lot of synergies and incremental initiatives which came up our way and which we have been exploiting for the last 1.5 years and are almost on the closure of those, and which are even reflected in our bottom line. So what we have done is our company was a 10-11% EBITDA margin. Kurlon was a 5-odd% EBITDA margin company. Together we have already reached a position where we are both 10 to 11% EBITDA margin company, and we aspire with the incremental savings and the increase in top line to be a 13, 14, 15% EBITDA margin company going forward. I would say rather more than 14-15% EBITDA margin company. So that's the rationale behind acquisition of Kurlon. As far as market share is concerned, I think we command along with Kurlon around 29 to 30% of the branded mattress segment. If you divide the Indian market, around 65% of the bedding market, so 65% of the bedding market is still traditional market, which are things like cotton mattresses, daris, chatais, etc., the traditional methods of sleeping mats. The remaining 20% is unorganized segment, which is some sort of modern mattress, be it foam mattress or coir mattress or a spring mattress, but they are manufactured by very small suppliers in local areas and who don't have known brands, and they just sell it in the market. The third part is the branded organized market. There are very few players, around 10 to 12 players only in India, who do branded mattress, which comprises of the 15% of the total category, I would say. And we enjoy 30% in that category. And why I'm explaining you this is because we believe that if I say of the total bedding market, what is my size, it would be say around 3-4% odd, and hence there is ample scope in the market for the next say 20-25 years for any company in this category to grow at a high double digit growth rate. So probably that answers your second question. Any counter question on these 2 points before I move to your next point?
For Lenco, yeah. Just wanted to understand.
So before that, I'll take your price increase and premiumization question. So if you see the price differential between the unbranded and the branded segment, it is already in the range of say 25 to 40%. Now this is an optimum range of price which you should keep as a difference between branded and non-branded segment. If you go anything beyond that, already unorganized segment creates a lot of dent for us, but then we will alienate most of our customers. So from a price increasing strategy, I don't think that's a strategy which we are going to follow. But yes, premiumization is important. That is better quality material, better sleeping KPIs built into the mattress and things like that. So we have been continuously advancing in the premiumization segment also, and you can see that in our EBOs where mattresses even in the range of 100,000 rupees and 125,000 rupees are available in those markets, and they sell, though smaller quantity than the general mattresses, but yes, they are selling and the sales are increasing gradually. So that's a segment which we are very cautious of and which we are continuously following and improving. Finally, I come to Furlenco. We acquired Furlenco in August 2023. We acquired a 35% stake for a consideration of 300 crore rupees. We further invested around 100 crores in the last year, October last year, taking our stake to around 45%. When we acquired this company, the rationale why we acquired this company was that we felt that furniture is a more complementary product to our bedding product, the mattresses that we do. And so any area which we need to expand or which we should expand beyond our existing category is the furniture segment. We have made attempts in the past also, but our focus on mattress had never allowed us to venture into that area. However, when Furlenco came our way, we found it as a good fit, primarily because one, it had a very strong brand already known in the market. Second, it had a very strong IT platform and that was running very successfully from a rental business. Thirdly, it was in furniture rental business, which was a nascent business in India, and looking into the West and the US, where this business is very flourishing and has grown into mega companies. We felt that the scope of growth in this particular category is very high. They had a full-fledged management team who was on the roads. And finally, they were present in, I think at that time, around 18-20 cities. Currently, they are into 28 cities. So we found them as an appropriate candidate with full experience of the category and everything what is required to make a successful business. The only thing that they were lacking was financial discipline. And probably not even financial discipline. I would say that achievement of a minimum threshold turnover where they could absorb their overheads. We made it very clear to them on the very first day that we don't run loss-making companies, and so you will have to focus at the bottom line, which they did. And post our acquisition in August 23, by February 24, that company was PAT positive. To some extent, the interest cost reduced because they used a lot of equity proceeds for the debt to be paid off, but to some extent, they also reduced their cost and improved their top line, which gave them the requisite contribution margin. We acquired it at a turnover of around 150 crores, and today I can share with you that the company's turnover run rate is more than 350 crore rupees per annum as on date. So I think that's a pretty successful acquisition for the company and have been quite positive for us till now.
Any plans to make it a subsidiary?
Not as of now.
Okay, thank you.
Thank you very much. The next question is from, just a second, sir. Raghav Maheshwari. Raghav, you can unmute yourself and you can ask the question.
Hi, sir. Very good afternoon.
Hello, Raghav. Good afternoon. Tell me.
Yeah. So, sir, first of all, like you mentioned, you have around 4,000 EBOs, right?
Yeah.
So, can we get a basic idea of like what has been the SSSG of those stores, just to get a understanding of the market?
So, Raghav, I can say that overall, from a mattress segment, we are growing by around 15%. From a category or bifurcation perspective, we don't disclose there because there are multiple cuts that we can do to it. As your predecessor just asked about the premiumization of the mattresses. So even in the mainline segment, we have multiple segments. Then we have online segment. Then we have the STI rural segments. So it is very difficult for us to segment it into different. Internally, we of course do it, but externally it creates a lot of confusion. So we don't disclose our different category details.
Understood, sir. And sir, so just to understand the consumer behavior right now in this particular line of business, are they moving more towards the online segment or are they moving more towards the store experience wala segment?
So, Raghav, online would always be there, and I think today the way the consumer has changed, he always go to the online first to make to basically understand the product, to understand the category, and to a certain extent decide as to what parameters he needs in the product that he ultimately will buy. However, globally, if you look at it, beyond a definite price point, online is just a research tool. And that's why if you see most of our competitors or the new age companies who are coming in are also today fighting out in the physical space. Be it Wakefield, be it Sleep Company, be it any other company, they are trying to expand their stores. In the absence of franchisee being available to them, they are expanding through their own COCO model of operations. So if you to tell me 5,000, 7,000, 10,000 sort of mattress, yes, those are plain vanilla products which people can go online and buy it. Generally, I feel, and the complaint that I get from my online segment is also that the quality is not up to the mark because the mattress is compressed and then sent to them. When it is uncompressed, yes, it acquires its shape, but somehow that doesn't go down well with the people. So I don't see that happening in a 30,000, 40,000, 50,000 category. Person would always like to go to his nearest store and have a feel and touch of the product. And that's our intent also, to make available stores at every nook and corner of this country. We opened 700 stores last year. We are opening 1,000 stores this year. And we are adopting technology to guide people to our stores, especially from Google and other places, so that it becomes very effortless for consumers to visit our stores and see the product themselves.
Understood, sir. And sir, so Sleepwell right now, Sleepwell and Kurlon, basically they are playing into the mattress segment, priced somewhere around 10,000, if I'm not wrong, right?
We play from Tarangaram of around 3,000 to around 125,000.
Around 25,000. Okay. And the difference between
1,25,000.
Yeah, got it. So, if I were to differentiate the product of Sleepwell and your peers like Sleep Company or Wakefit, pricing would be a main point of difference, can we say?
I won't say pricing would be a difference. See, for the same quality of mattress, I would say that they would be at least 10% costlier than us, because that is the internal efficiency that we generate, whether it be in terms of purchasing raw materials, manufacturing foam in bulk, or transporting. The transportation cost, we have 12 centers across the country. Transportation cost, all are lower for us. Now, this is a category in which it becomes very difficult for the consumer to understand the difference between one product and the other. So yes, there may be that it may be cheaper available on the with a competitor, but then it won't be of the similar quality, and that is what the consumer has to look at or look upon to buy this, to get into any of these categories. Price will not be a play in this. I would not say 10,000 would be the average price. The normal belly is between say 8,000 to say 15,000-18,000 rupees. That is the belly of the market in which most of the mattress sell. Yes, ultimately things boil down to what you are providing the consumers. The number of SKUs, the type of mattresses, the comforts, different sort of comforts that we provide in our mattress, I would say that is very rarely found in any other competitor, and you can experience that yourself. Just don't look at the brand name, put up bed sheets on 3 mattresses and just sit on it and you will feel the difference.
Got it, sir. And sir, one last thing, sir. So in this business of Furlenco, you are also providing mattresses, right, for rent on rental basis?
No, we are providing foam to them. We are selling mattresses to them. So they provide it on rent, but we sell them. We don't rent out.
Okay, so Furlenco specifically uses the Sleepwell mattresses only, or do they also use some other brands?
I hope they are using all Sleepwell. I'm not 100% confident, but foam they are taking all from us for sofa and others. And mattress also they would be taking from us. Should be. I would confirm it and let you know. Nikon, just note it down. Because whatever was available from us, they were taking from us only.
Okay, sir. And sir, can you throw some light upon this Stacko business?
Yeah, so Stacko is an IT division, was an IT division of Sheela Foam. So when we started around, when IT started coming into India and things started getting automated, we were still a very small company. And it was not possible for us to afford the cost of IT from external companies. Moreover, our requirement of IT was very detailed, because we had a network spread across the country with dealers and distributors in every nook and corner of the country. We wanted them to be connected to our central server so that we can improve our serviceability, how we can deliver our mattress within 24 hours. So in that context, this division, foundation stone of this division was laid down. We created an internal ERP through this division. We created different products which are used for any, which can be used for any company, for any utility, be it in operations, be it in HR, be it in finance, or whatever is required. And also we connected all our dealers through an app to our central server. Now what happens is, if a dealer sells any mattress, he just punches it on the app and it goes to the nearest producing center to which that particular dealer is linked. The mattress is made and overnight it is shipped to the dealer so that the consumer receives it in 24 hours. So
it's basically entirely for internal consumption.
It was entirely for internal utility, but subsequently it proved out to be a boon for us and an alternative business opportunity. The products that we had created became very handy for smaller SMEs and MSME companies, where we could install the same applications to them at a much cheaper price than the global ERPs and technical applications. And hence we started getting a lot of interest from these type of companies during the last 5-6 years. Now lately what has happened, because of the push of the government of India to indigenize and reduce dependency on external IT platforms, we have recently seen a lot of interest from even bigger companies, including government sector, who is willing to utilize these applications and to some extent hedge themselves from some unforeseen circumstances which may occur because of applications of international companies which they are using. We are very small in size. Currently, we should be around 50-60 crores. This year, we intend to get to 75 crores. But I think there are a lot of opportunities, and the capabilities that we have developed during the last, say, 15-20 years by working in, doing the work in Sheela Foam, I think that will come very handy in taking the company to this next level.
Understood, sir. Thank you so much, sir. All the best.
Thank you, Raghav.
I would request everyone to keep their questions to one only, because there's a limited time is there, and we want to have the next question is from Nilesh Sharma. Nilesh, you can unmute yourself and you can ask the question.
Hello.
Hi, Nilesh.
Hello, sir. Thank you so much for giving the opportunity. So I'm not following your company from very long period of time, but it is quite interesting. Just want to know about margin pressure, because due to various acquisition like Kurlon and investment in other companies, our margin and ROC has been declined. May I get when we can expect the normalization of the margin?
So ROC, I agree with you, because whenever you acquire a consumer company like Kurlon, you invest, the multiples that you give for such companies is high, and hence the capital employed increases to a very large extent, because of which ROC is impacted. However, and that is normalized over a comparatively longer period of time, which we are also cognizant of, and we are working on it, how we can increase this. The only way by which ROC will come will be increasing the top line of the company and commensurately maintaining or improving the margins of the company. So we intend to take, I know currently if you see at a consolidated level, this would be around 7% ROC coming. But if you differentiate between international and Indian companies, it will be a little better, maybe around 10-11%. Primarily, that is on account of the goodwill and the intangibles that we paid on Kurlon acquisitions. If you take out the intangibles and you just see India business, we would be somewhere around 25% return on capital employed. I'm not saying you take it 25, but why I'm highlighting this is because I wanted to showcase that company is structurally very strong and is generating profitability accordingly. However, we know that the quantum of investment that we have made, we will have to take the company to the next level to justify higher return on capital employed. And that is what is the journey that we embarked around 1.5 years back. We have already recouped profit margins. So we are at around 11% EBITDA margin in the last quarter. Let's see 1 or 2 quarters how this pans out, and thereafter there are certain incremental savings that are to come in, and we should also see some uptick in the top line, which would take us to the level of margins that we had committed to the or communicated to the market. Any margin beyond 13 to 15% EBITDA margin, I would not say that I would have any comment on that or any communication on that. That is our first target to be achieved by 27. Let us achieve that first with the commensurate growth in the top line. Thereafter, we will see how we can do more into those profitability parameters and what incremental we can bring out from the business. Sorry, Nilesh, you were saying something?
No, sir. Please continue.
So with this momentum once established and continued, I think in the next 3 to 5 years, you should be able to see somewhere between 15 to 18% sort of return on capital employed in our business. And thereafter, as the category grows, as I said, that ours is a business where we hold only 3 to 4% in the total mattress category, including the rural and other things. So there is a lot of scope for it to grow for the next 25 years. So I can say that as we grow, we have already established a platform for it. Everyone knows today Kurlon and Sleepwell across the country. We have launched in the rural areas. There also now people know about the brand. So the brand saliency is very high. As the category grows, I think we should be the biggest beneficiary of that growth. And once that growth starts coming in, over a period of time, I think this should reach to a different level of return on capital employed. But as far as margins are concerned, I think we are pretty much on there.
Okay, sir. So, sir, this is a 5-year target of 15% ROC?
Yeah, 5 years. See, I think these are simply numbers, Nilesh. Very difficult to forecast 5 years, but I would say that you do on our P&L saying that we should be able to achieve 13-14% EBITDA margin, and we grow say by around 12%, then where do we reach? I think you will automatically get the number which you are looking for. To say what will happen after 3 years or 5 years, I think my guess would be as good as your guess.
Okay. And sir, may I know the market share that we, after acquiring Kurlon, enjoying in the India in organized sector?
So in the branded organized sector, we have 30% market share, which is the highest in India.
And sir, what is the revenue guidance for 3 years or 5 years, if you can share?
So we anticipate around 12 to 15% growth per annum in the India business. Overseas business, you can take 4 to 5% growth.
Okay. And sir, any plan for reduction of debt?
Yeah, so debt will automatically be paid off. What we are doing is the 450 crores cash that we had, we are utilizing that now. Say we had kept it for as a contingency post Kurlon acquisition. Now that is over. So we are utilizing it to pay off debt. So the gross debt will reduce by around 450 to 500 crores. Net debt, of course, will remain the same. We intend to generate say around 150 odd crores every year from our operations. This year, next year would be more. And we also intend to monetize some of the assets of Kurlon and Sleepwell post the rationalization of the footprint that we have done in the past. So around 150 odd crores incremental would come from there. We hope that in the next 2 to 3 years, India debt should be paid down.
Okay, sir. Any further acquisition that we are planning?
Not at all. I think we have a big canvas in front of us, and there is a lot of opportunity in that canvas, especially in converting the unorganized sector to the organized sector. That offers a huge opportunity, and we will focus on the indigenous opportunity in an organic way going forward. Until and unless there is something which is very extraordinary, for which we will all come back to the investors.
Okay, so we can expect that this is the platform that we are running for at least coming 5 years, if any not a good opportunity come across.
Yeah, you can be rest assured about it. I think spending the amount of money in inorganic is foolish today, looking at the opportunity that we have in front of us.
Okay, sir. Thank you so much. Thank you so much and all the best.
Thank you, Nilesh.
So I'm taking 2 questions from the chat window. First question is on the global business. With the new capacity coming in, do you see there is a possibility of our global business, which has been having a relatively lower margins, lower growth, because the gross margins are 50% in Australia and 30% in Spain, still, so which is lower than our existing margin. How you see this business shaping up going forward, and are there any levers for the margin expansion in those business?
So Abhishek, these business have in the last 2-3 years suffered a lot because of the raw material fluctuations that have happened. We are mainly suppliers to mattress companies who have brands available in those countries. And to some extent, it becomes difficult to realize price increases when the raw material goes up in those countries, but when it reduces, you have to reduce the price. We have been fighting for it, and we have been successful in getting a lot of price increases, because of which we are quite hopeful that the 5-6% EBITDA margins that these current companies are currently having in the next 3 to 4 quarters, we should be able to see double-digit 10-11% sort of an EBITDA margin there. But that's the level that these companies will be. As far as top line is concerned, Spain grew in volume by 15% last year. Unfortunately, raw material prices reduced by 25%. So you could not see that growth in the top line. We anticipate Spain to grow by say around 10 to 12% every year at constant raw material prices. I would not forecast raw material prices. And as far as Australia is concerned, I see only 5 to 7% growth coming forward, because in that country we have a 40% market share in the foam supply segment for the mattresses. We are making efforts in the furniture, cushioning and technical foam segments in Australia to expand our footprint. But that will take a little bit of time to develop a new category in those countries. But broadly, you can take 5-6% growth with a 10-odd% EBITDA margin. These companies should give. However, one important thing is to be highlighted here, that our international business was around 35% 3, 4, 5 years back. Today, it is 25% of our total business. With India business growing much faster, India business will become a sizable portion and a bigger percentage of our total business. We hope in the next 5 years, we should be 85-90% is India business. At that time, this business anyway will become non-relevant or not very critical from a profitability perspective. So gradually, I think what we will keep those business as a stable business, generating consistent cash flows going forward. But our major focus would be on the Indian business, how to grow it more, how to grow it faster, and also how to realize the best possible margins in the business.
Thank you, sir. Sir, one more question. Is there any impact of rains have seen on our annual guidance, which you have seen because of the rains in north? Is there any negative impact on our sales?
So these are temporary factors, Abhishek. Yes, if you tell me the entire northern India was flooded, there was no movement for around 10 to 15 days. So last month, if you see, last month and a little of the early September was a little subdued. But I would not say that these periods are strong enough to impact our annual guidance. We have a festive season in front of us. Quite a long festive season already started. And anything on any movement in the annual guidance can be commented only post the festive season in December, around December, as to how the festive season goes. Today, till now, we are following the same guidance and moving in the same direction.
The next question is from Pallavi Deshpande. Pallavi, you can ask the question, please.
Yes, sir. Can you hear me?
Yeah, Pallavi, tell me.
Right. So like you mentioned, it's about the touch and feel, but there is also this aspect of these online players offering the product to use, 100-day return trial, all those kind of things. So just wanted to know our strategy for something on that side, if we can have for at least the premium mattresses, so that we are at a even, this thing on with competition.
So, madam, 100 days trial is a phenomenon. Why would someone give a 100 days trial? Please, I would deal a little bit into that. Someone would give a 100 days trial because one, they don't have a brand sufficient enough which can substantiate that the product that they are giving out to the consumer is of a definite quality. So they say that, okay, we have a good quality product. You take this product, use it for 100 days. If it doesn't work, please give it back to us. We will take it. However, in our case, that is not applicable. We already have established that credibility and quality. And we have been able to sell even in the online segment. Last year, we grew by 70% there without this 100 days benchmark. To some extent, if 100 days work only in the lower price segment, because those are plain foam mattresses given out. In premium mattresses, they anyway don't work. And secondly, when you give out this type of trial, there is a lot of what to say, casualness on the part of the purchasers, wherein they order it and then they cancel it, they use it for 10 days, 15 days, then they give it back to it. That does not increase sales, but to a very large extent that increases your cost, because one, that mattress cannot be used alternatively. Secondly, you incur a lot of cost in terms of transportation of that mattress from to and fro to the consumer. So we also deeply analyze this, and I think going into this, you don't make money, or you don't increase your market share to a large extent that you should incur these type of expenses. Still, depending on market vagaries, it is upon our salespeople and the schemes that they devise. I just heard a few days back that we may be of at some places we might have offered 10 days of return or something like that. But I think beyond that, it does not make sense. If your product is up to a quality, it doesn't need to be returned. However, in India, people don't treat it like this. So you have to be a little cautious, else it hits your bottom line. Sorry?
Can you hear me?
Yeah, Parikshit.
So thank you.
Next question. Yeah.
Just one question. So I'm new to the industry, but I would love to understand who is
Parikshit, your voice is not clear. I would like you to be a little bit more clearer.
Is it better now, sir?
Yeah, much better.
Yes, it's better.
Great. So I was saying that I am new to the industry, and I really want to understand who is our primary customer. Considering the different economic segments, you mentioned that if you're targeting conversion from the traditional bedding to mattresses, then I would assume it will be a distribution-focused growth. However, given the premiumization trend, I would also assume a focus toward the upper middle class and higher segments. So strategically, what is the company's 3 to 5 year focus?
So, Parikshit, the prime focus was on premiumization, and that will continue to be on premiumization. We have been selling mattresses in a segment which no one else sells in the country. So we have mattresses in the range of 75,000 rupees, which sells well. We also have some very premium mattresses in the range of 125,000. And basis internal data, I can tell you that the number of mattresses which are selling in the premium segment are showing good growth in the last 1 or 2 quarters, for which I just saw the data. However, mattress is a common use product. Every person needs it. If I don't sell in a particular segment, someone else will sell and will capture that market. That will hit me in 2 ways. One, there will be a new competitor in the market with a sizable market share. And 2, I will lose on the profit that I would have made on the medium and the lower segment mattresses. So we have different business heads covering different segments. Our online segment, offline segment, store segment is handled by someone else. At the same time, we also sell on the online segment. We also sell in the rural areas through Tarangs and Arams. And we also sell mattresses in the 8, 9, 10,000 rupees segment. I would say a little higher than the lowermost segment in the country. These lower segments may have a lesser gross margin, but from an overall profitability or EBITDA margin perspective, they are not very far off from the rest of the segments. Of course, leaving out premium segments, they are at much higher profitability, but on a general way, they are the. So I would say that our focus would continue on premiumization, but at the same time, we would continue to develop the rural markets through Tarangs and Arams, and we would continue to cater to the belly of the market, which is 8,000 to 18,000 rupees mattress market.
This is due to time constraint. This is the last question. Any closing comment or anything you want to share, sir?
No, thank you, Abhishek. Thanks a lot for organizing this conference and giving me an opportunity to clarify the points for the investors. And thank you everyone who has participated in this conference. taken time out for it. I have tried to answer to the best of my abilities, but would be open to any further communication which you guys might like to understand more about the company. Thank you.
I'd like to thank the management and both Gupta sir and Mr. Chan for being there on the conference. It's an interesting story, and we have a firm belief it will create a lot of value for investors. Please talk to our team. If you have any further, it's our coverage talk. Thank you very much. You may close down the call.
Thank you.
Recording stopped.